Hello traders, today is a new video. Today we are 29 April 2026. We traded gold today. I didn't trade Nasdaq because it was very choppy today, but I catch a real move here in gold using the volume profile. I'll break down every technical analysis I did to catch this banger trade. So let's begin. With further ado, let's draw the volume profile from the start of the day, which is 6 p.m. Eastern time. I waited for the Asia session to complete the work so I can trade. Let's see, let's draw the line for the midnight level. Plus there's midnight level. Stall. Okay, low battery. It's open midnight. Previous daily low. April 2026. That's previous daily low. That's the only levels we need. So we go to 15-minute chart. So I waited for the Asia session to complete. I didn't trade it. I didn't do anything on Asia session, but I waited for the opening of London on 3 a.m. Eastern time. So by using the volume profile, like we did see, the volume profile has two types of nodes: low volume nodes, high volume nodes, and we have the value area where the specific or the fair price that actually liked by buyers and sellers. So that huge volume, where the most contracts or orders has been created during the session. Okay, so just to right here, I waited to London to continue here. Okay, yeah, for the opening of London. What we see here, going for 5 minutes, the price was trading in the fair value from high fair value to low value area. Okay, here we start seeing a failed auction. Didn't break out. So the price started trading higher to the point of control, or VIH. Here we did some purge liquidity, which is failed auction by the buyers, switch momentum to sellers. Didn't extend. Okay. So what buyers for was bearish. The momentum that we had on gold the previous days was bearish. So I build my entire thoughts on the momentum of the goal is bearish. Okay, so how we actually had to take the trade using IMT and ICT. I only use two strategies: mechanical and ethical. Okay, what did we say last video? In the volume profile, we have two types of nodes: high volume nodes and low volume nodes. Low volume nodes looks like a valley, a rejection zone. So what we had here, low volume nodes here, you see the price traded below the value area low, so we are waiting for an acceptance. Okay, we are waiting for an acceptance. So the opposing liquidity was Asia low, the very first source of liquidity was the Asia low. Yeah. So we traded back to the low volume nodes. The price started rejecting it. So we created in ICT a logic in the lower time frame, like 1 minute. When we go to the 1 minute, we see that the price tapped in the low volume nodes here, created an IFVG, then the market structure should. What you call it, CISD. So after we tapped in the low volume nodes, we created an IFVG, an imbalance, engulf selling imbalance through a buying imbalance. That's what we say the buyers could observe. When we see in the footprint, if we be using an order flow, we could see here that the buyers got exhausted or absorbed. In the second candle, we see a flip in delta. In delta, the seller, that telling us that the sellers are in control. Negative delta, flipping delta from positive to negative. Okay, in ICT here, we see an IFVG retapped here, our point of entry, stop loss, this high, protected high, targeting. First target was Asia with 2.4 RR, then previous daily low, just like that, 8 RR trade. It was actually a banger. I'm gonna lie, high quality trade. Didn't like as you see here, a very high quality A++ setup, as we usually do. 8 RR and get out of the market. This is how you stay profitable. Just kick the market once and you go out. Do whatever you want. Go to the gym, play football, do sports. I don't know. Go to a trip. I don't know. Don't do second trades or or you will get in FOMO trading or revert trading. You want to revenge from the market because you had a loss or you got greedy. So this is my trade for today, guys. I hope you see you soon. Goodbye.